The stock market is going to crash soon. It is very overvalued to an unhealthy level. You can see on this chart that the price earnings ratio, which determines how much stocks are valued, shows that it has a value of 38, which is historically very, very high. It shows we're in extreme bubble territory. So in this video, we're going to talk about why the stock market is overvalued. Stick around. We've got some great content for you, and there's a great quote at the end that I know that you're going to love. So the reason why the stock market is overvalued, when you look at this chart of the price earnings ratio, it shows that we're in extreme bubble territory. Now, I'm going to explain what price earnings mean, that for those that don't understand. Basically, it's how much money you're getting for how much the asset is costing you. For example, if I buy the gas station down the street for $1 million, it produces $100,000 in revenue. That would be a PE ratio, or a price earnings ratio, of 10. So I'm paying $10 for every dollar of earnings. So now, at the time of this video, $38 for every dollar of earnings. That is very, very expensive. For the stock market, kind of the typical average is around 14 or 15, in that range if you look at a long range of what is actually fair valuation. So right now it's very, very overvalued. So when you look at a position of risk, when you see something is very, very expensive or an asset is very high, it's one thing if earnings are there to support it, but earnings are not there to support it. So over time that cannot stay, and it has to crash. It's not only possible, but it really is inevitable. So another reason why the stock market is going to crash is we are in very historic highs. If you look at kind of where we're at right now, look what's happened since 2008. We had a big recession before 2000, 2007, 2008, 2009. In that range, stock market crashed. The S&P, the Standard & Poor, which is an index, was valued at 600. Well, now we're talking, just over 12 years later, it's valued at 3,800. So we're talking, 5, 6 or more times what it was back then. But the economy hasn't grown that much. The economy's grown a little bit, but it hasn't grown that much. So we've had this huge expansion in assets. Some of this is because of the Fed throwing money at everything, and basically it's caused this huge asset appreciation. And you may be saying stocks go up over time, right? It's just inevitable, it's going to go up. Well, what I would say to that is this. In 1929, that's the famous stock market crash. There was a huge panic. We eventually had unemployment of 25%. It was crazy. We haven't had that in a long time, and people think that just is a foregone thing that could never happen. What people don't realize is with the stock market, it basically crashed, and it didn't get back to where it was for 25 years in real terms. So if it was at, I don't know what the figure was, let's say it was at 500, it took 25 years to get back to the same and equal spot, so until 1954, which is really shocking. So it's just amazing and shocking to me that, from my experience as an investment advisor, they talk about traditional investments. Traditional investments are stocks and bonds, right? Oh, they're so traditional. You buy stocks and you buy bonds. And the challenge is stocks and bonds can crash over 50% in a 12-month period.
Danger, Will Robinson! Danger! No, Will Robinson! Danger!
It's happened a number of times, I don't know, every 10, 20 years it happens. And sometimes even like this last year, it crashed 30%. Sometimes it will recover, sometimes it won't. It can take a very long time, like in this example, can take 25 years. So we're at historic highs. There is a lot of reason to be concerned about your stock portfolio. Another thing I wanted to say is that low interest rates cause asset bubbles. So what happens is the Fed has kept the interest rate at 0 for years. You can see this chart, how the interest rate has been so low for so long that in order to actually be able to get a return on your money, you have to go into riskier assets, right? You have to go into stocks, you've got to go into bonds, you got to go into different things and different types of real estate, even single family and other things. And what it does is it can create asset bubbles where things continue to expand. So real estate and other assets are affected by this. And what happens is people ask the question, well, how long? How long is this going to go on for? Well, it's as long as the Fed continues to keep interest rates low. But this can't last forever. So it won't last forever, but interest rates will eventually rise, because what happens over time, inflation will pick up. because we have more dollars in circulation that are going to be chasing things, interest rates are going to have to rise to try to keep pace with inflation so the economy doesn't get overheated. So while this is all inevitable, we don't know the timing of when a stock market crash will come, but we do know that it will happen at some point because what rises will fall. JP Morgan once said this quote. Somebody asked him, they said, what's going to happen with the stock market? He said, prices will fluctuate. So you may be watching this thinking that I'm totally against the stock market. I'm not. I don't think the stock market as a whole is a terrible investment. I just think right now, with the way things are valued, I think there's a high risk of things being in trouble. Now, John D. Rockefeller said, the best time to buy is when there is blood flowing in the streets. So the idea of when things are really bad, it's a great time to look at actually getting in and investing. And so what I would say is right now is just be very cautious and look at the downside in all your investments, particularly the stock market. All right, so I promised you a quote, and this is one of my favorite quotes. I love Warren Buffett. Would love to meet the guy someday. He says this, he says, be fearful when others are greedy and be greedy when others are fearful. So it's this idea of being a contrarian. So I encourage you, there are many options outside the stock market. What we do, we buy multifamily apartments. We've got, at the time of this video, 800 units. We're continuing to look for more deals. What's exciting about it is that there's a great inflation hedge built into it. When we've had stock market crashes, it's been a very stable asset. That's why highly wealthy people, especially they did a study that people that are worth over $100 million, they had the highest amount of their net worth was in real estate. And we're not just talking single family, we're talking larger multifamily and other sorts of commercial assets. So I hope you enjoyed this video. Please consider subscribing to this channel, like the video. That would really help us to have other people find this video as well. I want to encourage you, we got this report that I wrote called The Best Investment During and After a Time of Pandemic, so you can check that out. And then also, if you're interested in doing deals with us, we are in the process of looking at deals. We're constantly finding new deals, trying to find the right deals to invest in. You can go to BronsonEquity.com. You can check that out. You can join our club and basically start a relationship with us, and we can let you know about those deals. So we'll look forward to seeing you on the next video.